Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, October 21st, 2016, and this is the Daily Report for Gold and Silver, our weekend review in which we combine it with trending markets to give you an overall sense for activity this week in the markets, as well as our forecast for next week. An absolutely interesting week considering strength in the U.S. dollar and the outcome of precious metals, specifically gold. Gold closing up on the week, although when we look at COMEX, it is unchanged on the day. December COMEX contracts closing at 1267.50 with a very, very tight range, 61.70 on the low and 68.80 on the high. When we go over to spot gold is trading up about $3.65 at $1266.75. Same type of range, about a $6-7 range. And you also see that spot and December contracts are now coming into alignment. Net change, as I said, up about 0.3% or $3.70. Over to silver trading up about 3 cents today, 17.53, the low 40, the high 55, an extremely contracted range even for silver. And then lastly, when we look at COMEX, because they are kind of coming together, you've got 1754.50, in essence unchanged on the day. So traders, no doubt a solid performance for gold this week, closing substantially higher on the week. When we take a look at our first chart, this of course is a weekly chart. You can see these lows here at about 1249.60. The high of the week was at 1275.40. And as you can see, this one horizontal line represents the close, which is at 67.50, which is precisely a 61% retracement. And the fact that we've closed at this point, to me, is pretty solid. Pretty solid considering the kind of activity we saw in the U.S. dollar. Now, I've just brought up a Kitco Gold Index. And as you can see, when we take a look at the activity this week, today in gold, you really have to account for a strengthening U.S. dollar, because that alone really subtracted about $4.40 worth of value per ounce from the price of gold. Normal trading, even though the market closed in essence unchanged to up about $1.30, which is what this print was when we took a screen grab of the Kitco Gold Index, normal trading actually took the market up about $5.70, a 0.45% raise. But once you account for a strong U.S. dollar, of course, then you see the net change of simply $1.30 higher on the day. So traders, no doubt, we had a solid performance in gold this week, considering at the beginning of the week, gold was trading roughly at $12.50. From there, over the next 3 days, it traded up to a high of $12.73. Yesterday, it corrected just a little bit, and today closed in essence unchanged. All of this in the face of a very strong U.S. dollar. A couple of things that are noteworthy about this, and that is the fact that we talked about last Friday, we put the trade on Thursday of last week, was that a critical area that we had to see the market hold was this range, this created by the fib harmonics between, call it 1250 on one side and 1238 on the other. The 1238 is a 78% retracement of this smaller move meaning from 1200 up to 1375, and then this blue line is a 38% retracement at 1250, and the 1250, of course, is a much larger fib retracement. We actually have to go in and compress the chart to see that range. And as you can see, this particular fib retracement runs from the low of the year, roughly at around 1050, up to the yearly high at 1074. This is our 38% retracement. Now, the fact that the market held these levels, to me, is significant, and especially in light of a strong U.S. dollar, extremely significant. Now, interestingly enough, I'm going to convert this chart from a standard candlestick chart to a Japanese average chart, because what we'll see in the Japanese average chart is some real clear-cut signs that we have, in fact, gotten a real pivot point within the market. We have seen this market trade to extreme lows as the market sold off a couple of weeks ago. It was trading roughly at about 1345. The market moves down very, very hard. And take a look at this. You've got these solid, strong red candles coming in. That's significant. It says that you've got a lot of momentum and power behind the trend. But look at how they begin to really diminish. Body range, body size gets real small. You get a pivotal doji, but it still stays red for a couple of days. And then over this last week, especially the last 4 trading days, it's gone ahead and turned back to green. Today, we did get that doji candle. That because the market closed in essence unchanged and closed pretty much in the same place as our close yesterday. But nonetheless, a solid performance this week. Obviously, my recommendation is to maintain your long position at 1259.60. Maintain your stop below 1240. So traders, you cannot look at the precious metals complex or crude oil for that matter without taking into account an incredibly strong US dollar. Increasing in value, the dollar index of about 3% this month alone. Today, about 0.33% gain, up 32 points at 98.63. Let's take a look at a dollar chart. Traders, absolutely no doubt a stellar performance in the US dollar over the last 3 weeks, this month alone, gaining approximately, as I said, 3% or 3 full basis points. As you can see, the market was trading just above 95 at the beginning of the month, and it's now trading at 98.65. So you've got that 3-point move over the last 3 weeks. This week, not as strong as the last 2 prior weeks, but nonetheless, this market has just been up and away. We talked about various resistance points, potential resistance points, I should say, and the market has just really slipped right through there. We had this 1 point here. We had these tops here. As you can see, the market has really disregarded any kind of technical level. This is running on fundamentals, the fundamentals that we will probably see an interest rate hike in December. The dollar has been strong, and on a technical basis, there really isn't any real resistance in the market till about 100 on the dollar index, which at this point is under 1.5 points away. So it's not that far-fetched that we'll see this market possibly go as high as 100. At that point, you're going to run into some very, very strong resistance on a technical basis. We'll have to see where it goes. My guess is next week we could see a continuation of this market moving to higher ground. So crude oil is trading higher on the day. It has also had a strong week, currently at 50.89, putting it up about 26 cents per barrel, or a net change of about 0.5%, which is really a tiny move in crude oil, considering that dramatic ranges and moves in crude oil can be 5, 6, or even 7% on a daily basis. However, at the same time, it has been caught over the last couple of weeks in a range between $50 and $52 per barrel. And here's what I mean by range bound. We are looking at a daily chart, standard candlestick format. We also have what I call cascading channel lines. These are bullish cascading channel lines. I believe I've got them set to 33 cycles, so 33 days on a daily chart. We have our midpoint right here. And as I said, there's no doubt, but we have had this market really trading sideways. Here's $52. You can see that we hit this a couple of weeks ago. We hit this high earlier this week. That's on the upper end of the spectrum. When we look at the lower end of the spectrum, you can see $50 and then to a degree about $49. So we have definitely seen this market really, although it's got a bullish slant, it is trading sideways and has been over the last couple of trading weeks. I would expect to see continued sideways market moves between 49 and 52 unless there is a fundamental shift in either the OPEC agreement by OPEC member nations or inventory on hand. Traders, no doubt, a really interesting week in the precious metals markets, specifically gold actually closing higher on the week. This in light of a U.S. dollar that has just been a runaway freight train moving to higher ground. As I said, this month alone gaining about 3% in value. That's a lot for the U.S. dollar. And in light of that, we did have a gold move. And when we look at spot, it moved from about $12.50, which occurred at the beginning of the week, up to its current highs that we saw at 73 to close at 66. As you know, 1266 is a key number for me. It represents a 61% retracement from the rally from 1200 to 1375, and so a break above that is what I was looking for at the beginning of the week. And then what we have been looking for throughout the remainder of the week was for the market to form a level of support at that area rather than it being a resistance price point. I'm quite satisfied with that. Overall, our recommendation, of course, is to maintain our current long position, which is sitting roughly $8 behind this. So we've got some profits in here, as well as to maintain our current stop level. We will look to move those stops up probably mid next week, but I want to have some distance between the current price of gold and 1266 because it's 1266 and I'm going to look to initially move the stop just under. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.